Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES simply balanced within a range. Given Friday's strong liquidation move and breakdown, we can still get sell side active at the key resistance zones above. Heading into the open, we have short-term resistance at 70 quarter to 72 quarter, and then beyond that, we have the main resistance area on the day at 76 to 78 and 80 quarter to 82.75. So in the event of a short-term breakout above 70 quarter to 72 quarter, we can still expect sell side to be active on first test of 76 to 78, as well as 80 quarter to 82.75. On the downside, we have short-term support based on the overnight session at 64.5 to 65.5, and then the main support on the day is at 58 to 61. Now, if the sellers are really going to maintain the control that we saw from Friday, then ideally ES actually holds below 70 quarter to 72 quarter. So a failure at the pre-market resistance zone would open the door for a retest of the overnight low at 64.5, 65.5, and a test of the 58 to 61 area, which is still a spot where responsive buyers can be active, but at this point we would have to be more cautious on taking long setups at 58 to 61 because heading down there and perhaps even making a new low would simply confirm the breakdown from Friday. And that's really what we're going to be trying to answer today, whether the breakdown from Friday was a legitimate balanced breakdown or whether the market is simply going to continue to balance within a defined range. Looking at the Russell, we saw that TF didn't really put in a proper breakdown on Friday, so it actually held up really well, and that could lead to stability in the S&P. So, we're not all out bearish on the market just yet. Our short-term directional bias is still neutral or neutral bearish, which means that we could simply be balancing within a range, but sellers still have edge at the key resistance zones, and we can't be overly aggressive on the long side. So, given Friday's weakness, it's unlikely that we're going to put in a V reversal and immediately just go right back up towards Friday's high. Most likely, even if the market is eventually going to reverse and go back up, we'll still get responses at the resistance zones above. And then on the downside, 58 to 61 is really going to be key. And, if we're heading down there on a lot of downside momentum, higher volume, and broad market weakness, then we do have to be careful at 58 to 61. It doesn't mean that the long setup there can't work out. We just have to determine what the state of the market is in real time and then make that trade decision. And if we continue to break down below 58 to 61, then it would serve as a confirmation of the breakdown attempt from Friday. But until then, it's simply a breakdown attempt. And if we don't get follow through today, then the market could just continue balancing within a range. In the event of a move below 58 to 61, we have to be cautious at 54 to 55. That's a minor area of support. And then we can still expect buyers to be active at 49 to 51.5 and the support zones below as well. So those are the main ideas heading into the open. Let's see if the sell side can defend the 70 quarter to 72 quarter and then mainly the 76 to 78, and we'll take it from there.